All right, let's welcome in Kevin Horner, Senior Manager, Trading Services Education at Charles Schwab, to take a look at some names that are on the move. You're charting a semiconductor name, LAM Research, which had positive earnings last month. It's up about 10% this month. So what are you watching here most closely as you look at this name?
Well, as I often say, Nicole, it wouldn't be a segment with you all if I didn't have a semiconductor name to bring with me. So what I found interesting on this one, we often, traders say things like market doesn't repeat itself, but it can rhyme. And I felt like the LAM Research chart was a really good representation of this. I was looking at this since about September of last year. We had pulled back to a 200-day moving average, but note the ovals I've got on the screen here because these are pretty important areas. The rhyming I'm referring to are the retreats to the 50-day moving average coincident with the RSI down below. Now, we don't have the line in here, but the level of interest for me is the fact that these RSI retreated to the same level and have moved through the 50 line. It's an area where trend traders look to join into a trend. It gives them the feeling that they're buying at an area of support beyond just the price action. So what you have is a bit of confirmatory indicator here with the retreat to the 50-day most recently last week, really offering traders an opportunity to join into the trend. And you can see that since that tag of the 50-day last week, we have shown higher highs and higher lows along the way. So it's representative of maybe getting back on path with the trend that had been in play for a while here. Traders in the short run might be eyeballing the little bit of a gap move we had from January 27. So the high that day was about 545. That could present a brief area of a pause here, or it could be an area where maybe the bears look to make a stand if it wasn't capable of popping through. But the longer-term trend here has been favorable and bullish. And as you were just discussing with your prior guests, a really strong area of the market, the semiconductor, something that's been leading us for some time.
Yeah, and as we look at this one, obviously we can't help but think about those autos, the chip shortage that Ford was talking about. I wonder how this could potentially impact this particular stock or the group, right? Supply and demand.
Absolutely. Yeah, supply and demand, absolutely. If you're a businessman, you know that when supply is tight, you can certainly bump your costs or your prices up a little bit and improve even further on your margins. So that's a win. It couldn't be a win for the group.
Could be. Tell me, Kevin, about Intuitive Surgical in the medical device space.
Sure.
This is an area that you're watching. Tell me about that one.
Well, I often like to find, as I will say, I like to find groups that are moving well and then find the stocks that can be leaders in that group. So what I did was I looked at the IHI ETF. It's the iShares U.S. Medical Devices Exchange Traded Fund, and it's been trading really well. In fact, yesterday closed at new highs, holding up today as well. Intuitive Surgical in this group is a company that has their device is known as the Da Vinci surgical device. And so what this does is it enables surgeons to work on a console and make very, very small steps that they need to make. It's a fantastic device, and really what you can see from this particular chart is a group trading at all-time highs. This is really positive. It's what you want to see, obviously. The ISRG chart, what I find interesting is that it's actually been struggling, and so while I went to go look for a stock that I would feel confident in this space, what I noted was that we found the 50-day moving average on ISRG to be pretty difficult. In fact, if you take a look at the action that we're showing today, we have tried a third effort to pop through that 50-day moving average and are being roundly rejected at this moment. Now, we can't say whether or not that's going to maintain, of course, but it makes this level that we've tried to break out, it even further reinforces the resistance here. So at this moment, it could be setting up for the bears a little bit. What I took from this chart was that the time it's spent below the 50-day now is much lengthier than the time it's spent below the 50-day back in September and October, respectively. So It's struggled a little in the last 3 weeks here. I think bulls would feel much better with a close above the 50-day. If that doesn't come home, though, then it means that the bears are in control here and can use something like that extended high today as maybe an area to set their own risk, a place where you would have a buy stop to protect a short position.